Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxom, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxom, rock-solid markets.
The future of capital markets runs on Bitcoin. Introducing Roxom, the first ever exchange where Bitcoiners can trade treasury stocks entirely in BTC. Get exposure to top Bitcoin holding companies like MicroStrategy and Metaplanet, priced in Bitcoin from the start. No fiat, no middlemen. This is what financial freedom looks like. Early access now live at roxom.com/treasuries. Built by Bitcoiners for Bitcoiners.
Today on the Blockchain Report, Bitcoin's back up around 120K and the White House's crypto golden boy just bailed as we find out America's Bitcoin stash is less of an ocean and more of a kiddie pool. Michael Saylor dropped $2.46 billion on Bitcoin and says altcoins will help it. Sure, and Big Macs will help with your cholesterol. The $1 million Bitcoin dream is still on course until quantum computers treat your private keys like wet tissue. And we'll be joined by Sander Andersen and Mr. Big Beat himself, Stephen Orr. Stay tuned. All that and more in the Blockchain Report. Right now, let's go. Good morning, my fellow digital degens, and welcome back to your daily dose of Bitcoin Bedlam here on the Blockchain Report. I'm your host, Hank Hudson, coming to you live from the Bay Area, where the new ChatGPT says the probability of your neighbor is working on an AI startup in stealth mode is roughly 112%. So, yeah, I think we're safe from the robot uprising for at least another century. Yes, it is Monday here in the beautiful San Francisco, where the sidewalks smell like ambition and occasionally other things too. It's that magical time when your weekend confidence crashes headfirst into your Monday reality like a leverage long during a sudden Bitcoin correction. Now, before we cannonball into the bubbling hot tub of blockchain absurdity, let's keep things civilized here and tap that like button like it's the snooze alarm you swore you wouldn't hit today, and follow RoxomTV and yours truly, Hank at RoxomTV, on all platforms in the world, because I don't get up at 4 a.m. every morning for you to not show us a little bit of love. Now, grab that overpriced oat milk latte, close that Slack window that's been open since last Thursday, and let's talk about why in crypto, Monday isn't the start of the week, it's just the prologue to whatever chaos is about to nuke your portfolio. But before we get into the newsy what's-its, let's see what the markets are doing in this morning's market rundown. Let's go. All right, it's Monday. Is it a cause for celebration or deep sadness? Looking pretty good right now. Bitcoin back above the 120K mark. We were even as high as 122K in the early hours this morning, but we've seen a little bit of a clawback since then. But hey, 120, I'll take it. Ethereum also joining in on the fun. It is at over 4,200 bucks a coin, almost 4,300. We might see breakouts on the horizon for both of these, so we'll keep you posted on that. XRP sitting around 319 a coin. Cardano is down 1.5% this morning, and Dogecoin is down over 2.5%, falling all the way back to beneath 23 cents a token. What else we got here in TradFi? More of the same. TradFi is looking okay too. Right now, the Dow Jones Industrial, it's down 150. But the rest of the market's doing okay, especially a couple of the individual stocks here. The NASDAQ Composite's up about 17 bucks, so not a lot going on in the hole there. And the S&P 5 is down about $4, currently sitting beneath that $6,400 level. On the individual side of things, MicroStrategy, they're having a day. They're up 3.5%, currently over 408 a share. Michael Saylor's doing his happy dance. Tesla, they're having a big day themselves, up nearly 4% to around 342. Elon's back to work. No more of that government stuff, and the price certainly seems to be reflecting that. Coinbase is up big today, 6%, sitting at almost 330 a share. Nvidia standing pat around 182, and GameStop doing a whole lot of nothing right around that 22.5 mark. All right, we got a lot to talk about today, including our deep dive with our first guest this morning, Sander Andersen of Finpeers. So let's roll the stinger and get started. Camera one, por favor. Hey. All right, so we're getting things underway this morning with our first guest of the day. He is a world-class connector, a visionary entrepreneur, and someone who's been building game-changing companies since most of us were still figuring out our first job. He's a former competitive swimmer who's taken that same discipline into the world of finance, bridging Bitcoin and private equity to open doors that were once locked for everyday investors. As the founder of Finpeers, he's on a mission to modernize private markets break down borders, and build what he calls an intergalactic financial system. Please give a big blockchain report welcome to the one and only Sander Andersen. Sander, welcome to the show. We are so happy to have you here, and so is our studio audience. How are you this morning? Happy Monday.
I'm good. Thank you so much for having me.
Oh, the pleasure is all ours. Sander, I want to get into it right off the jump here. I would like to start off with maybe a little bit about your personal backstory, because I think it helps people kind of understand the why behind what you're building now. So you've had kind of an interesting background here. You went from competitive swimming to building companies. How did that athlete mindset shape the way you're working today?
I think that's the fundamental of everything, to be honest. I think most of my childhood I spent in a swimming pool, competing more or less against myself, because that's what you do in swimming. You try to be better and improve your time. And I very much like using the same structure in my professional career and as an entrepreneur. I started when I was 17. Started building digital companies, and from 2017 I slowly moved more and more into the crypto industry and ended up in a Bitcoin only world.
Yeah, that's the only place to be, my friend. I definitely get it. So you said you kind of got into the space around 2017. I am always interested with people in the space. What was that moment, that orange pill moment, like for them? What was that like for you? How did you find yourself getting integrated into the world of Bitcoin initially?
It actually took me quite a while to be Bitcoin only, and I think that's why I'm Bitcoin only today. I started more in the Ethereum space. The moment when I understood the potential here was when I saw that you could connect these global digital communities and start building together. And initially, I was quite interested in the programmability part of things, which is not actually my thing. So I did a lot of mistakes. And after I moved to Switzerland and doubled down on Bitcoin, since then things have gone a lot better.
Yeah, the road with Bitcoin's usually an up and to the right one. So I think we can all agree that seems to be the path worth traveling. But you said it took you some time, and that seems to be a common thread with most people getting into the space. Even the Michael Saylors of the world, apprehensive at first, they do the research, and then they're like, oh, this is all really starting to click now. Was Bitcoin your first move into the space, or were you said it was Ethereum was the first, and then what ultimately made you make that change? You just got deeper into the rabbit hole, and then it just all started clicking that there's Bitcoin and then there's everything else?
No, I invested both in Bitcoin and Ethereum, but back then it was not a big amount of money, but I spent most of my time on Ethereum. But at the end of the day, especially after I got my first son, I started thinking a little bit more long term and started thinking, okay, how is the world actually looking for my son in the future? And then it clicked for me that Bitcoin is actually changing everything, and it actually ends consumerism. It's actually it's the money printer's fault for many of the problems we have today, and Bitcoin fixed many of these things. And more importantly, when I started Finpeers, which is a family office community investing now only into Bitcoin investments, I started also to understand the potential of the asset class conquering the bigger pockets of money out there. And that's when we spent 100% of our time into the Bitcoin ecosystem.
Yeah, that makes a lot of sense. I think, you know, we find ourselves kind of falling into these same traps, like especially early on, chasing those quick bucks. And I was guilty of that initially in the space too. But then when you start looking back long term, Bitcoin just makes more and more sense for our, you know, financial and monetary futures. And you said when you had a son, that really seemed to change for you. And I totally get that. And now you're building Finpeers. And I would love for you to kind of give us a simple breakdown of that for our audience that might not already be familiar with this project.
So basically what Finpeers is doing is that we provide access to the Bitcoin ecosystem, especially targeting family offices and high net worth individuals. And we also own another company, H100, which is currently the biggest treasury company, Bitcoin treasury company out of the Nordics, holding close to 800 Bitcoin now. And what we saw there was the institutional and high net worth demand for Bitcoin treasury companies, but Finpeers also provides liquidity to over-collateralized Bitcoin loans and Bitcoin hedge funds, and basically trying to be the partner for high net worth individuals and family offices when they want to allocate to this industry.
Got it, got it. And you mentioned the Bitcoin Treasury company and that you guys have your own Bitcoin Treasury. That has been the big hot topic of 2025, seemingly for sure. We're seeing new companies pop up with their own treasuries. It seems like every day right now. When did you get into the Bitcoin Treasury business, and why do you think that's such a great long-term play as we continue to build out the Bitcoin ecosystem?
So first of all, we started to follow Sailor quite early, but it really clicked for me that all the local markets will have a Bitcoin treasury company when we saw what Metaplanet was doing. And immediately after that, we started looking, okay, who in Europe is doing this? And back then it wasn't many. And we ended up being the first Bitcoin treasury company out of Sweden, and now taking a leading position in the Nordics in general.
Very amazing. So you're a trailblazer of sorts up that way. That's incredible. My stepfather is Swedish, so I've had some time in Gothenburg. I know it a little bit. I got to go back. It's a beautiful country. And I was doing some research on you before we had you on the show, and I saw something that said you in the past have mentioned that you feel like private markets are a little old school. I would love for you to kind of give our audience an example of how you feel things are currently still stuck in the past and how you're helping build for this new monetary future right now, specifically with Finpeers.
So yeah, what we are strong believers in tokenization, and I think most of the tokenization will actually happen on top of Bitcoin, and more specifically on the liquid sidechain, where you basically can peg in and peg out Bitcoin and make all your investments Bitcoin denominated at the end of the day, because I think many people start to be Bitcoin denominated now, but you still need cash flow. You still need to invest into businesses. And I think having that layer where you can like invest with your Bitcoin or your stable coin into a more seamless ecosystem where you don't need to go public, but you still can use what we see as digital distribution. We personally believe that three things are very important to build billion-dollar companies in the future. One is digital distribution. The other one is digital asset. You need to access it as a digital asset. And third, you need digital workers. Digital workers can be people on X sharing and like this, like you need to have people helping you get the message out, but also eventually AI working for you and your companies. So what we have done at Finpeers is trying to be the liquidity layer where we can educate investors to invest into these tokenized assets. We acknowledge that it's still early. I think Bitcoin treasury companies is one step in the right direction, which at least involve digital assets and digital distribution. But at the end of the day, I think we will see more or less the full private markets will go to be tokenized, and I think most of it will happen on top of the Bitcoin blockchain.
Yeah, well put, well put. And on your platform, you use the blockchain, right? And I would love for you, a big part of what we try to do here on the Blockchain Report is make these technical terms and new things a little more accessible to the masses, right? So for someone outside of the tech world, how does the blockchain actually make investing easier or better for people as we move forward?
So most of the traditional financial world is very siloed. So if you want to invest into the Swedish stock markets, you need to open up an account with a broker that has access. If you turn the whole structure around with tokenization, you can have one wallet accessing everything. It's basically an internet layer where you have one wallet access to all the investments, and you can basically build the whole financial systems around internet first, and basically remove all these silo barriers that you see in the traditional industry. Tokenization also opens up for listing your company earlier. For example, you have a startup, you don't need to go to the local market. If you have a great X profile, or I don't know, a TikTok video that goes viral, you can actually start raising funds and building your company in an internet native way. And I think that's the future. And I think basically what you're doing is making your company digital and accessible by everyone.
I love that. And that's really, I see a common thread with a lot of these Bitcoin-focused companies, right? Is making finance more accessible to everybody, because it's a space that has just been dominated by the big players for so long, and we're kind of democratizing the monetary world order as we move forward to the future. And at Finpeers, you found a way for smaller investors to team up and then get into bigger deals. Can you break down how that process works for us?
So what we basically do is not to be too technical, but we set up a specific company that invests the full ticker that is often required. So in a good deal, the one that provides the deal is in a good position, so they can tell, okay, 10 million is minimum. And you might not have 10 million, but what you can do with a specific SPV that are tokenized is to give more people access to that 10 million and then invest into the popular company. So it's basically a way of giving people access in a more democratized way without needing to invest that big ticket.
Mm-hmm. Okay, yeah, no, I appreciate the breakdown of that. And at Finpeers, you work across many different countries, not just the Nordic ones, Sweden, Norway, Finland. I guess my question regarding that is, how do you keep everything compliant while still moving quickly and innovating new products? That seems like an absolute headache. How do you go about that?
So as long as it's a private placement, and we right now only deal with professional investors, which makes things a little bit easier, but we will open up for more people eventually. And Switzerland has such a good regulation infrastructure that makes it quite transparent for us of how we can structure this vehicle that invests into the target company.
Is that why you're based in Switzerland? Is it because Switzerland is known as being a pretty crypto-friendly country? They're probably one of the most crypto-friendly in the world. So how does being based there give you guys a strategic advantage for what you're trying to accomplish right now?
I think the DLT law itself, like the blockchain law of Switzerland, which are very easy to understand. You can go to the regulator, you can get a very quick answer. I think that's the strategic advantage being here. Switzerland has such a long history, everything from Ethereum Foundation and more crypto products. You have big crypto banks like Signum, Bitcoin Swiss. It's quite integrated into the society, and you have a lot of expertise from lawyers to accountants to audits to how this new digital asset class work.
Mm-hmm. I mean, even before crypto, right, Switzerland has always been considered one of the, if not the best place in the world to store any kind of funds or assets that you may have. But a big issue within the crypto community, and we see it all the time, is the security element as we kind of navigate out of this Wild West era of crypto and Bitcoin into a more structured system going forward as these new guardrails are getting placed in each country. And it's all, like we kind of talked about, different from country to country. If someone was with Finpeers, for instance, and they lost access to their account, how do you make sure that someone's investment is still safe and they can get access to it if they were to lose it initially? Like, these are things I'm always thinking about as we build these new products into this kind of new frontier.
Yes, so the good thing about these security tokens is that they are within the financial regulation. So if you lose your lose access to your wallet, we can always recover that wallet since you have the legal document that you own that part of the company. So it's already exists technology that can do that.
Got it. And who is in the Finpeers community right now? Is it mostly wealthy individuals? I know you mentioned family offices. Is it a mix? Like, who are you really appealing to right now, especially for people in our audience that are interested in the services that you provide?
I think they're in general optimists when it comes to technology, and many of them are Bitcoin holders. I mean, a lot of our success has been in Bitcoin products. So basically, like, yeah, if you want to invest into the Bitcoin ecosystem, that's like our sweet spot of investors currently.
Is Bitcoin always been the plan from day one, or were you ever like considering Ethereum or other options in terms of investing, or are you guys always been Bitcoin centric from the jump?
No, so we started as a borderless technology investment provider, but we quickly understood that Bitcoin itself is an industry that we personally believe in. I personally allocated a lot of my personal funds to Bitcoin. So supporting the Bitcoin and being the investor relationship of Bitcoin and building on top of Bitcoin is where we wanted to spend our time, and so more or less only Bitcoin and Bitcoin related investments now.
Okay. I think a lot of people share that sentiment, and why we're seeing a lot of Bitcoin focused or almost Bitcoin only companies right now. Who would you say at this moment would be your closest competitor in this space? And how does Finpeers, what do you guys do to actually differentiate yourself and stand out from those competitors right now?
I think at the end of the day, we do capital raising, and so we compete with many of the big investment banks. But our like niche is that we do more or less Bitcoin only, and therefore we have access to the big profiles in the industry. We know the best hedge funds. We know very, very good access to early stage, all the way up to the Bitcoin treasury companies. We can connect investors directly with the stakeholders in the industry that have been here for many, many years already. And since we do that every day, it gives us a competitive advantage over those that provides all the other investments as well.
That makes a lot of sense. And for our audience out there that's watching us and they're listening to all this new information about Finpeers and what you do, if one of them wanted to join Finpeers tomorrow, what would that journey look like from them signing up to investing in their first deal? Can you walk us through that process?
So we have a very white glove services at the moment. We have capacity to onboard and understand each investor. They will send us an email or click the become a member button on the website, and we'll set up an interview or a call with them to truly understand their demand and why they want to allocate to the Bitcoin industry, and there also map out what potential investments we can help them with.
And as a company that services people from across the globe, do you notice any trends or between different areas of the world? Like, I mean, do you have investors that are from the United States, or are they primarily in Europe right now? Or is it just everybody everywhere? This is a Bitcoin world and we're all living in it.
Yeah, this is a Bitcoin world and we're all living it. I think if we see demand from all around the world, public companies has actually made it a little bit easier for us because we can tap into the regulated market and it's easier to onboard, but we can do that with private investments and eventually also fully tokenized investments.
Okay. And now that we're living in this Bitcoin world, what is your vision for Finpeers let's say 5 years from now? Like, what does success look like then? And what do you expect Bitcoin to be at that time? I mean, you don't have to necessarily give me a price prediction, but how much more integrated into the financial system would you expect Bitcoin to be in just 5 years from now?
I think in 5 years, it's already taken up most of the big markets to be honest, especially when it comes to fixed income products. I think Bitcoin per share is going to be a key metric that most investors will have as their KPI, and Finpeers will help the investors increasing Bitcoin per share and get a Bitcoin return, and not like necessarily measuring everything in dollar, which devalue itself with 5 to 8% every year. So our goal is to find investments that can increase your Bitcoin stack over time with different strategies, and do that only.
How close do you think in 5 years from now we'll be to, a Bitcoin standard? Is the dollar still going to be the main currency of the world, or are we rapidly approaching a turning point or an inflection point where everybody's actually seeing the world through the lenses of Bitcoin?
I think most companies will hold Bitcoin in their balance sheet. I think that will be the superior asset to hold to protect your hard-earned money, either as an individual or a company. And we will see that in most assets, to be honest. I think we will see Bitcoin mixed with real estate. We will see Bitcoin mixed with private equity. We will see a Bitcoin as part of a better financing deal. I think it's just like Bitcoin is a superior collateral. When you see these Bitcoin over-collateralized Bitcoin loans, I think you would rather invest into that compared to any of the other private credit products out there. Because you can get the same return and it's over-collateralized and it's zero operational risk as you see in the traditional private credit markets. When you lend to an over-collateralized Bitcoin loan, you have the Bitcoin there, it's 100% over-collateralized. And if they don't pay you, you can sell that a very liquid asset. So I see Bitcoin eating up balance sheets. I see Bitcoin eating up the debt and fixed income market. And I think a lot of the investors will start thinking, okay, do I actually increase Bitcoin per share here or increase my Bitcoin stack? Because Bitcoin will be the hurdle rate, especially for risk investments.
Yeah, and the Bitcoin per share term we've seen really grow in popularity with the Bitcoin treasury companies, of which you guys are one of. Which always begs the question for me, and I would love to get your thoughts on this. Do you feel like the Bitcoin treasury play is getting overhyped at all right now? It seems to be moving so fast, and you have companies that are following Michael Saylor's playbook, but not everybody is in the same position as Strategy, right? Where they've been buying Bitcoin since 2020. So if we were to potentially see a large correction, as we've seen many times in Bitcoin's past, we could see some of these companies that bought in at 120 be well underwater if we're at 90K. Do you think we're in danger of that at all, or are we entering a new phase of Bitcoin's price cycle where it doesn't fluctuate in the normal halving cycles we've seen previously because there's so much institutional money and governments that are finally getting on board? What are your thoughts about that as we kind of enter this new era of Bitcoin?
I mean, to answer the first question about like what happens if the Bitcoin goes down, long-term thinking Bitcoin treasury company will still raise capital and still use the capital markets to increase Bitcoin per share, which is the key metric. I think if you don't believe in the long-term value of Bitcoin, you should never invest into Bitcoin treasury companies. And it's quite dangerous to actually evaluate Bitcoin treasury companies in dollars. You should really measure them in Bitcoin, because that's the path we are going into. We want to increase Bitcoin per share and give more Bitcoin to our shareholders over time. That's why you should buy Bitcoin treasury companies in general. If you only believe in Bitcoin, buy Bitcoin and keep it in cold storage, and everyone should do that as well. But if you want an actively managed Bitcoin vehicle, like a Bitcoin treasury company, then you should measure, are they able to increase Bitcoin per share over time? And there you can actually use the bear market to be more efficient, acquiring more Bitcoin and increasing Bitcoin per share faster. What you should be aware of is how is the debt structure of these Bitcoin treasury companies. In our example, we have 5-year terms, 0% interest rates, and no liquidation risk in between. So you believe Bitcoin will be worth more in 5 years than it is today. So if it falls down 50%, it doesn't impact our company. The second thing we do is that we do Bitcoin denominated debt, which is if we take on one Bitcoin as debt, we owe back the Bitcoin. So it doesn't necessarily change anything. If the Bitcoin price goes down in dollar, we just return back the one Bitcoin. It doesn't put any additional credit risk on the company. So bear markets is for accumulating more Bitcoin. It's always been like that, and that's also true for Bitcoin treasury companies.
Is that how your Bitcoin accumulation strategy, you expect it to play out as you, I assume, continue to try and put more Bitcoin on your balance sheets? Do you guys wait for what you anticipate to be bear markets and then load up? Or are you like Michael Saylor and you buy when you buy, because for every Bitcoin you don't buy, you're gonna be missing out on $13 million in the future, or whatever he says? What is your strategy like at Finpeers, and or H100, how did you come to that conclusion that that's the best way for us to accumulate Bitcoin as we move on to the future?
No, we follow very much what Michael Saylor is doing. We think that is the right thing to do, because in each part of the cycle, you have different options and different strategies and different opportunities to accumulate more Bitcoin. And therefore, it's better to be in the market than timing the market. That's at least my personal experience, that I'm not good enough to timing the market, so I should just stay in the market.
Mm-hmm. And as we're seeing this rapid expansion of Bitcoin treasury companies and are having their own Bitcoin treasuries this year specifically, there's a lot of companies out there that I'm sure are wondering, should we be doing the same, especially for like big companies, right? We saw Tesla buy Bitcoin years ago, but we haven't really heard of any active accumulation anytime recently. But if a company was to come to you and they said, hey, we're considering doing a Bitcoin treasury play of our own, what would you tell them to convince them that it is in fact a good idea for their company's future?
So it's two different things you need to consider. Then one is, do you want to be a Bitcoin treasury company? Bitcoin treasury companies is all about increasing Bitcoin per share. But if you have an operating business and want to take advantage of your surplus capital, and you want to store that, and instead of paying dividends, you want to increase shareholder value by buying more Bitcoin, buying Bitcoin like a share buyback, or increasing net asset value in a different way. That's also a brilliant idea. I think you will also see asset classes coming together, like real estate plus real estate plus Bitcoin, and real estate plus private equity, where you can actually ride the wave of Bitcoin and adding operational excellence on top of it. So you should really understand, do I want to be a Bitcoin treasury company, all about raising capital, finding capital structure to increase Bitcoin per share over time, and that's your product? Or are you an operating business with a Bitcoin on the balance sheet strategy, which is also great, but it's how you communicate that to the market is different. And because putting Bitcoin on your balance sheet doesn't necessarily make you a Bitcoin treasury company.
Sure. No, that makes sense. And in your business, do you find like your clientele, is it much younger, or do you find yourself having to ever orange pill people from the older guard in traditional finance and get them in? And like, how do you go about convincing someone who manages a lot of wealth but is kind of stuck in old world finance? How do you tell them to do things differently now, and why should they be doing it differently?
So I think I haven't rarely seen someone spending 20 hours or more studying Bitcoin that didn't end up allocating at least some of their portfolio to Bitcoin. And I think many of those that have seen the real estate wave understand that, okay, this is also like a type of digital real estate, and you see the demand and ask themselves, okay, do my grandchildren or my children, are they more likely to buy Bitcoin or an extra apartment? I think many people comes up with the conclusion that they will buy Bitcoin, and therefore I should allocate some because the demand of that fixed supply asset that are incorruptible and easy to transfer all around the world and internet native, that should be a good idea. And after studying 20 more hours, they start to be more and more Bitcoin maxi. And we have seen this over and over again. And even like very sophisticated big family offices ends up having maybe 20 or 30% of their wealth in Bitcoin or Bitcoin related products.
So it sounds like anyone who's not already investing some of their money into Bitcoin, it's probably an issue of not having the educational aspect down yet, right? They haven't put in the time, because once you do it, it seems inevitable that people kind of orange pill themselves once they've put in that time to research what Bitcoin is all about. Do you have any recommendations for books or other podcasts or places people should be going to get some really great info so they can kind of start their own journey into the Bitcoin space if they haven't already?
Yeah, I think every journey into Bitcoin, I think, is unique. And I think like the Bitcoin Standard is a great book, for example, which basically like give you a little bit of history. It gives you a little bit about the asset, and that's a great place to start from a book perspective. But if you have a decent amount of money, and send us or everyone send us a message, and we can put you in touch with someone that can really teach you or maybe share their experience into, because we are humans at the end of the day, and we like to learn from others. And that's what we try to do with Finpeers, like be the safe place where people can reach out and ask the question without like needing to go online or feel dumb, but we can educate them, because we are in the same team, and hopefully eventually they will invest with us. And so it's an investment worth doing for us as well.
Yeah, absolutely. And I love that you guys are active in educating your clients so that they can feel, safe and well informed when they're making these large investments, because we all know it's very important to everyone. What is the best way for people to go about if someone in our audience is like, this Finpeers stuff sounds pretty interesting, I want to get more information of how I could potentially invest my hard-earned money with you guys? What's the best way for them to get in touch with you? Should they go to the website, or what do you recommend?
So the website is quite efficient, or reach out to me on X, and I'll happily set up a meeting with me or my team, and we start from there.
Love it. And I know we got to let you go here soon, Sander. Before we do, I have one final question for you. When I was doing my research on you, I saw that you mentioned something about building an intergalactic financial system. What does that actually mean in practice, and what do you think that would actually look like?
I'm 28 today, and I'm pretty sure that in my lifetime, I'm also a big longevity fan, so I think we will at least live to be 150. So
Whoa. In
in that lifetime, I think humans will not only live on the planet as we do today. I think we will either go to other planets, or we will have like capsules that fly around that basically like make us a intergalactic society. And therefore, I think we should strive for having a financial markets that also work planets to planets, which I think Bitcoin might be the only solution we have ready to do that today.
I love that. I'm very excited to buy more Bitcoin while I'm hanging out on Mars with Elon in the not too distant future. Exciting times ahead, for sure. Sander,
Exactly.
You've got some really interesting takes. I would love to talk to you more about the 150. If I get to be 150 years old, God willing, that sounds incredible. But it sounds like you've got a lot of interesting takes, Sander, and I'm sure our audience would love to learn more about them. Is there a good handle on Twitter or X so we can follow you, or I can tell our audience to go to if they want more of your Bitcoin takes or interplanetary system, anything? What's the best place they can find you?
Yeah, Sander Andersen on X will probably be the best place to start.
Amazing. Well, Sander, I got to tell you, it's been such a pleasure having you on the show today. I really appreciate you taking the time to join us here on the Blockchain Report. Next time you have something big at Finpeers, make sure to come on the show. We'd love to talk about it. And I hope you have a great start to the rest of your week, my friend. It's Monday, so looking forward to seeing what you guys are building. And I hope you have an amazing week, my friend. Thanks again for joining us.
Thank you so much. Thank you so much for having me.
Pleasure is all ours. All right, we're going to take a quick break. When we're back, we got our top stories in this morning's bull run, all coming up on the Blockchain Report. And we'll be joined in just a bit by Mr. Big Beat himself, Stephen Orr. You won't want to miss it. Stay tuned. We'll be back in just a bit.
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
in a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the center of the planet moved to Wall Street. Today, we're traveling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxom, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxom, rock-solid markets.
All right, welcome back to this morning's bull run, everybody. Sorry for the delay. It's a live show after all, and sometimes things get a little haywire. But we're back, so let's get going with this morning's top stories. First, we're going to start with something that might as well be ripped from the pages of a crypto thriller. We're talking about Bo Hines, the man who was essentially the younger crypto czar for the Trump administration, is now stepping down from his role as the executive director of the White House Crypto Council. Now, why should we care about this, you're asking? Well, it's because it just so happens this exit comes right when the U.S. government's Bitcoin holdings are under some intense scrutiny. Apparently, the U.S. holds only 29,000 Bitcoin, not the 200,000 that was previously thrown around, which is a big difference. This whole mystery about how much Bitcoin the U.S. has is getting a little absurd. Now, is the government hoarding it, or are they just not telling anyone how much they've actually got? Hines' mysterious departure doesn't seem to be related to the Bitcoin reserve, but the timing is definitely a little curious. Could this be part of a larger strategy? Well, who knows? Meanwhile, Patrick Witt, Hines' deputy, is stepping in to replace him. Witt has a Pentagon background, which somehow feels perfect for overseeing the future of Bitcoin in America. Doesn't it? Sure. Bitcoin's price has been holding steady above 120K, and everyone's waiting for some kind of clarity on the U.S. government's position. How much Bitcoin does the government actually own right now? Well, is it a lot more than they're letting on? Is it less? Nobody really knows just yet. But Hines' exit definitely leaves some questions unanswered, and Witt will have his work cut out for him trying to clarify things. So we'll see how that story develops as we learn more. And here we go again with our Lord and Sailor, Michael Sailor. There he is. The Bitcoin evangelist who thinks he's on a mission to convert the world one Bitcoin block at a time. Saylor's company's strategy just bought another 21,000 Bitcoin for just under $2.5 billion. That's a solid chunk of change for just a few more BTC. The company is now close to holding over 629,000 Bitcoin. That's worth over $74 billion at today's prices. That's more Bitcoin than most countries or central banks hold. But here is the kicker to all of this. Saylor is still laser focused on Bitcoin, even as altcoins are gaining momentum in the corporate treasury world. However, Saylor, he's not particularly worried. In fact, he sees the growing popularity of altcoins as a good thing, which sounds kind of weird at first, right? I mean, altcoins helping Bitcoin? But Saylor, well, he's not wrong. He believes the rise of altcoins means that there's more innovation in the market, and in turn, it strengthens Bitcoin as the leading digital asset. So let's break this down for a second, shall we? More altcoins might actually be good for Bitcoin. Okay, it sounds like some strange altcoin advocacy disguised as Bitcoin maximalism, but let's give Saylor some credit here. He's sticking to his guns. He's still calling Bitcoin the lowest risk, highest return strategy available. It's like the S&P 500, but better if the S&P 500 was a digital, decentralized, and let's be real, way cooler asset. Meanwhile, companies adding Bitcoin to their treasuries have doubled in just 6 months. They're up from 60 to over 160, and Saylor's got a pretty big hand in it. But as more corporate treasuries add Bitcoin to their portfolios, Saylor doesn't want them to get distracted by shiny new altcoin toys. He's still firmly in the Bitcoin-only camp, and honestly, can you blame him? I mean, let's be real. Altcoins might be having a bit of a moment right now, but none of them have the network effect or security model of our beloved Bitcoin. Ethereum, Solana, that's cute. But Bitcoin, it's the real deal. No contest, you know it, I know it, and Saylor certainly does. And once the Bitcoin naysayers, America's biggest banks, are now racing to grab their slice of the crypto pie. From JP Morgan to Goldman Sachs, America's top financial players are now diving headfirst into BTC, moving into everything from custody and trading to rewards programs. It's no longer should we, it's becoming how fast can we? According to a chart by River, these banks are officially beyond the crypto curiosity phase. They're now going full-fledged crypto enthusiasts. Banks like JP Morgan, PNC, Charles Schwab, and State Street have already rolled out or are preparing to launch Bitcoin-related products, while others like Citigroup, Wells Fargo, and Goldman Sachs are giving their select wealthy clients a taste of the orange coin. Heck, even American Express has hopped on the bandwagon with Bitcoin rewards cards. So much for being a traditional stodgy institution, am I right? Meanwhile, Fifth Third and USAA are dipping their toes into the crypto waters, exploring and or integrating crypto services for their clients. Now this, my friends, is a huge shift for the traditional finance world. These were the same banks that once scoffed at Bitcoin like it was some kind of digital snake oil. Now they're full-blown crypto players. Since early 2024, the changes have become shockingly obvious. Morgan Stanley, for instance, has considered letting thousands of brokers recommend Bitcoin ETFs to their clients. Charles Schwab is planning to add Bitcoin and Ethereum trading to satisfy the ever-growing demand for a one-stop investment platform. PNC is all in with Coinbase, letting clients trade crypto directly from their bank accounts. And JP Morgan, not to be outdone, is partnering with Coinbase as well to let Chase credit card holders fund their wallets and buy crypto starting in fall of this year. Meanwhile, custody and tokenization are gaining some serious traction, with State Street, BNY Mellon, Citi, and JP Morgan all testing stablecoins and blockchain-based settlement systems. And don't forget our Lord and Savior Michael, who we talked about earlier. He's still out here preaching that banks will soon be lending against Bitcoin, with the ultimate goal of making BTC the backbone of America's financial future. Now, as the U.S.'s biggest banks embrace Bitcoin, it's becoming quite clear America's crypto innovation isn't just coming, my friends. I think it's already here. And Jack Dorsey, well, he's back in the news again. He's the man who might as well be the Bitcoin, well, not the godfather. I mean, that's Michael, but he continues to go all in on Bitcoin as Block Inc., his financial tech company, just bought 108 more BTC during Q2 of 2025, bringing their total Bitcoin holdings to almost 8,700 BTC. That's right. Block is stacking sats like it's spam during wartime. Now, this move shouldn't really come as a surprise to anyone who's been paying attention to Dorsey's Bitcoin obsession. The man has been calling BTC the native currency of the internet for years now. And apparently, he wasn't kidding. Meanwhile, the price of Bitcoin has been a little all over the place as of late, and Block had to report a $212 million loss on their Bitcoin holdings in Q2. So sure, Bitcoin might not be performing like the hottest stock in the market all the time, but Dorsey, he's not panicking. He's just doubling down as usual. I think that's the Michael Saylor playbook if I've ever heard of it. But let's talk about Cash App here for a second. This is the bread and butter of Block's entire operation, and it's doing just fine. We're talking $1.5 billion in gross profit from Cash App alone, which is pretty impressive for an app that's mainly used to send money to friends or grab some Bitcoin, because who needs a bank when you've got an app that does both and doesn't charge you just for, existing. Cash App's secret sauce in all of this? Short-term loans, buy now, pay later, and the ever-present Bitcoin integration that just keeps on giving. With 57 million active users, Cash App is cruising, and Block's Q2 revenue topped out at over $6 billion, so they've got plenty to keep them happy right now. But the big story here is that Block's mission to decentralize Bitcoin mining. You heard that right. Yes, Block is stepping into the Bitcoin mining hardware business now. They're developing their own Bitcoin mining chips. So talk about going all in. Jack Dorsey's trying to create that's right, Flava. Jack Dorsey's trying to create a world where anyone can mine Bitcoin, not just the big boys who can afford a farm in the middle of nowhere. Sure, Bitcoin's been a little bumpy lately, but Dorsey's been purchasing Bitcoin since back in 2020, and he's still very much in it for the long haul. Now, will Block continue to ride the Bitcoin train to financial glory, or will it crash as Bitcoin inevitably dips back down into the red? Well, I guess only time will tell. But for now, Block is just getting more and more entrenched in Bitcoin, and that's probably not going to be changing anytime soon. And Tour de Meester, Bitcoin's resident Nostradamus, just dropped a bombshell in his latest report. And spoiler alert, he's not predicting some sad mid-cycle dip. Oh, no. De Meester's calling for a $500,000 Bitcoin. Yeah, boy! Yeah, I'm excited about it too. I mean, Bitcoin's bull run, according to him, is just getting started. And he thinks there's still a 4 to 10x potential from here, which could put Bitcoin comfortably in the 500K range in just the next few years. So how's that for some next level optimism, right? I dig it. But let's hold on here for just a second and talk about why this isn't just another crypto influencer making a wild Bitcoin price prediction. Institutional demand is growing at an insane rate, and we've got nation-state adoption happening all over the world. If you don't see it coming, you've probably been having your head stuck in the sand. We're seeing it every day here, people. The U.S. government's embrace of Bitcoin, with the creation of the Strategic Bitcoin Reserve and Bitcoin ETFs now holding around 1.4 million BTC, is really sending shockwaves across the entire globe. But let's talk about the real meat and potatoes of this, shall we? De Meester isn't just optimistic for fun, he's backing it up with data. And we love data. Whales, those big institutional players, are holding on to their Bitcoin and not exactly dumping it. It's like they know something that maybe we don't. Maybe. Meanwhile, the percentage of Bitcoin sitting in unrealized profit is between 50 and 70%. And if that doesn't scream mid-cycle strength, I'm not sure I know what does. And what about all those major risks everyone keeps talking about? You know what I mean. Hacks, Mt. Gox, Coinbase centralization. Get it out of here. De Meester's not worried. He knows the game, and Bitcoin's built to survive all that stuff. Sure, a massive hack could cause a little bit of a hiccup. We've seen it before, but Bitcoin's resilience has always been a part of what sets it apart. We've seen it recently. Galaxy Digital just had that $80,000 Bitcoin sale. Price barely moved. We're back up to 120 like it's nothing. So I think Demeester might be onto something, and we'll be checking back with him to see if Nostradamus earns his stripes. And Bitcoin's 2025 highlight reel is pretty stacked already. I mean, we're talking spot ETFs launched early in 2024. BlackRock's pulled in $1.3 billion worth in just 2 days. By mid-2025, right around now, U.S. Bitcoin ETFs had $14.8 billion in net inflows. And in March, Trump signed off on a strategic Bitcoin reserve with allegedly 200,000 BTC already in the vault. But again, as we talked about earlier, that is up for some debate right now. Now, July, we had Crypto Week in Washington, right? Bitcoin hit new all-time highs of 123K. So naturally, we're all expecting $1 million per coin in the near future, right? Well, Kathy Woods from ARK Investments says that 1.5 million by 2030 is very much on the table. Michael Saylor says $1 million happens when Wall Street holds 10% of its reserves in Bitcoin. Robert Kiyosaki is saying $1 million by 2030, calling it an inflation hedge. I mean, the pro $1 million argument is pretty much all the same usual suspects. I mean, we got a fixed 21 million supply cap, we have more institutional buying, and adoption's climbing from 6.8% of the global population. Not too bad. FOMO, with 67% of current investors here, are purely here to make money. But to hit $1 million, Bitcoin's market cap has to blow past 21 trillion, which would mean that it overtakes gold. And that would take a massive Wall Street allocation, global adoption hitting up to 40% of the planet, regulatory clarity, and scaling upgrades like the Lightning Network. Now, the winners of all of this, of course, will be the early adopters. You people out there, the ones you watching the show, me a little bit, but mostly you. I mean, we're talking over 900,000 addresses that are holding over 1 Bitcoin or more. Strategy Stash would be worth around 600 billion. Satoshi's estimated 1.1 million BTC vault would be worth 1.1 trillion. Now, the losers in this game, of course, would be the latecomers, buying at nosebleed prices and finding out the hard way that the elevator only goes up until it doesn't. And then there's the, oh, by the way, problem of quantum computing. We can't forget about that, right? About 4 million Bitcoin, we're talking roughly 25% of the usable supply, sits in addresses with exposed public keys. That's a strong enough quantum computer, in theory, could shred Bitcoin's cryptographic locks, a hit that could trigger a global recession. Yeah, well, it's a lot of coulds. It's a lot of coulds here, guys, so let's just slow our roll. I mean, yeah, post-quantum security is in the works, but upgrading the network could take up to 76 days offline, which in Bitcoin years is basically eternity. So $1 million per Bitcoin, very possible. Just don't forget, scarcity is great against inflation, but it's useless against math that's smarter than you and me. All right, we're taking a break. When we're back, we have more bull run. And again, Mr. Big Beat himself, Stephen Orr, will be joining us to talk about the markets and what you can be expecting next with Bitcoin's price action. Stay tuned. More Blockchain Report after this.
It runs on Bitcoin. Introducing Roxom, the first ever exchange where Bitcoiners can trade treasury stocks entirely in BTC. Get exposure to top Bitcoin holding companies like MicroStrategy and Metaplanet, priced in Bitcoin from the start. No fiat, no middlemen. This is what financial freedom looks like. Early access now live at Roxom.com/treasuries. Built by Bitcoiners for Bitcoiners.
welcome back for more of this morning's Bull Run. Alina Vranova, the founder of Satoshi Labs, gave a chilling warning to the crypto community at the Baltic Honey Badger 2025 conference in Riga, Latvia. Who the hell named it that? According to Vranova, every week there is a Bitcoiner, at least one in the world, who gets kidnapped, tortured, extorted, and sometimes even worse. Yikes! Now, this isn't some rare occurrence, apparently. It's happening every freaking week. Vranova spoke out about the growing wave of wrench attacks, which are known as physical assaults and kidnappings that Bitcoin holders have been facing in recent years. And what's the end goal here? Well, violent criminals looking to get their hands on people's private keys. Because as we all know, Bitcoin is your wealth in your pocket, except it's all digital, and unfortunately criminals are starting to catch on. Yeah, I don't like it either. Vranova added that it's not just Bitcoin OGs, those early adopters, who are being targeted. No, this is happening to small-time crypto investors as well. She warned what seems to be a problem only for Bitcoin OGs is not really the case. We have seen cases of kidnappings for as little as $6,000 worth of crypto, and we have seen people murdered for $50,000 in crypto. 50 grand for a life? Gross. That's really whack, guys. Don't do that. I mean, it's even worse when you realize that wrench attacks, again, violent assaults meant to forcibly steal private keys, are set to double this year compared to the worst year on record. People are scared, and for good reason. And of course, data leaks from centralized crypto exchanges like Coinbase are only making this more dangerous. These exchanges are required to collect sensitive user info for KYC purposes. And guess what? Those user details are leaking online, making it easy for criminals to track down targets. Now, Vranova reported that 80 million Bitcoiners and crypto users' identities are now online. And out of those, 2.2 million have home addresses exposed. I mean, imagine a world where your private information is floating around in the dark web just waiting to be exploited by someone with bad intentions. And we haven't even talked about how these attacks correlate with Bitcoin's price yet. Vranova pointed out that the frequency of these attacks spikes during bull markets because when Bitcoin's price rises, criminals see it as a golden opportunity to make a quick buck or two. When Bitcoin hits an all-time high, expect these attacks to rise like clockwork. Even the Coinbase data breach in May and the leaked credentials from Apple, Facebook, Google in June have only opened the floodgates for scammers to target crypto holders. Phishing, social engineering, hacking, and identity theft are all on the rise, especially now that 2.2 million people's home addresses are exposed. It's pretty obvious here, gang. Crypto investors need to be more vigilant than ever before. So make sure you're staying safe out there, boys and girls, because the world of crypto isn't just volatile, it's getting more dangerous every day, and you need to make sure that you are protecting yourself and those coins. So, tread lightly and protect yourself. Next up, because the WNBA is in the middle of a bizarro crypto-fueled sex toy scandal, and that is a sentence I never thought I would say in my life, but here we are. Yeah, that's really weird. So on the night of August 5th, if you might recall, a neon green sex toy, and yeah, I said that right, was thrown onto the court during a game at the Crypto.com arena. Now you might be thinking, okay, what's the big deal? What does that have to do with anything? Well, hold on to your crypto wallets because this wasn't just some random fan moment, no. It was part of a master plan, a plan hatched by the crypto community behind something called, wait for it, Green Dildo Coin. Yes, that is a real thing, and it gets better, I guess, because Green Dildo Coin was created just a few weeks ago, back on July 28th, the day before the first incident, and shockingly, its value has nearly tripled in a week since the toys started flying. Now, the masterminds behind this stunt, who, by the way, are still keeping their identities as shady as a crypto exchange in the middle of a hack, are now claiming that they're empowering crypto communities to think outside the box. Because nothing says innovation like using sex toys as a marketing tool. The masterminds were apparently watching the game, waiting for the moment when the toy hit the court, because to them, that's when the meme coin culture would officially go viral. Apparently, this empowerment movement also involves throwing plastic toys at athletes, which is, let's face it, so much better than using the internet for actual good. Now, it doesn't stop there either. This stunt has made such waves in the crypto world that the meme coin community is calling the whole thing a masterclass in getting attention. In fact, a member of the Green Dildo coin community, they have a whole community, said this is empowering to every effing crypto community to start thinking outside the box. Meme coins should make you laugh. Well, yeah, okay. If this didn't make you laugh, it at least should make you question your life choices. But let's give the mastermind some credit, I guess. They're doing what any successful meme entrepreneur would do, which is exploit the WNBA and make people take their eye off the balls, pun intended, very much so. Now, you might be thinking, isn't this just a bunch of trolls messing with the WNBA right now? Yeah, it is, very much so. But it's also worse than that. It's about crypto fans using the chaos to pump a coin. In fact, Green Dildo's coins trading volume hit over $1.5 million in just a couple of days. So, yeah, for better or worse, I guess I'd say mission accomplished. I guess the lesson here is that if you want your coin to blow up, throw a sex toy onto a cord and let the internet just kind of do its thing. The WNBA. No, get out of here. We don't want to promote that. Get out of here, Flavor. That's not good. The WNBA has now vowed to eject anyone who throws an object onto the court, and good luck with that. The crypto crew behind this might have just won the internet, but they're also drawing attention to themselves in all the wrong ways. Sure, I guess they're making some money, but they're also demeaning an entire league and its athletes. It's a messy situation, and unfortunately, the WNBA isn't the only victim here. This entire crypto stunt raises the question, are we really going to let meme coins made up of pure nonsense dictate the future of digital currency? While Bitcoin, with its real-world value and credibility, continues to hold its ground in the market, we can't exactly say the same for the Wild West of meme coins. So, take a page from the Green Dildo coin playbook. It's all fun and games until your coin crashes harder than a poorly timed throw at a WNBA game. Stick with Bitcoin, fam. It's not perfect, but it's a lot more predictable than this ridiculous phallic circus. I don't like it. Get this stuff out of here. They keep doing it too. I don't know if you guys seen this. I don't like it. The WNBA didn't ask for this. Leave them alone. All right. In other news, Harvard's endowment fund, which is run by the Harvard Management Company, or HMC, has made substantial investments in both gold and Bitcoin during Q2 of 2025. And now you're saying, Hank, but how much of an investment? Well, they purchased 1.9 million shares of iShares Bitcoin Trust, valued at over $116 million, and 333,000 shares of SPRD Gold Trust worth about $101 million. Now, this shift marks a sharp change from the previous quarter when HMC pulled out of major big tech positions. But here's the kicker. Harvard is getting exposure to Bitcoin without owning the actual asset. Instead, it's investing in exchange-traded funds, or ETFs, that track the value of Bitcoin and gold, like the iShares Bitcoin Trust, which holds Bitcoin on behalf of its investors. So unlike directly holding Bitcoin or gold, these ETFs trade on public exchanges, offering liquidity without the hassle of physically storing the assets. HMC's directly held public equities portfolio now amounts to about $1.43 billion in total, which is up from $1.13 billion in Q1 of this year. But here's where things get a little interesting. This isn't just about buying up Bitcoin and gold for the sake of it. According to John M. Longo, a Rutgers Business School professor, investors are turning to gold and crypto because they're seen as stores of value in times of inflation. The pandemic-driven global money supply expansion is making people look for assets that can hold their value, and Bitcoin just so happens to be leading the charge. Meanwhile, Bitcoin's price has been a little volatile this year. I mean, we reached an all-time high of $123K in July after dipping to as low as $75K just back in April. This volatility has only fueled the institutional adoption of Bitcoin, especially as pro-crypto policies from the Donald Trump administration continue to encourage digital asset adoption. In short, Harvard's decision to load up on Bitcoin and gold isn't just a hedge against inflation, it's a bet on the future of global finance with Bitcoin firmly positioned at its core. All right, we're taking a quick break. When we're back, we got blockchain without borders, and El Salvador is up to it again. Doing what? You'll have to stay to find out. We'll be right back with that and more on the Blockchain Report. Welcome back. It's time for a little blockchain without borders. And in a move that has crypto fans everywhere buzzing, El Salvador has passed a new law that will let large financial institutions hold Bitcoin and offer crypto services to sophisticated investors. Yeah, you heard that right. Now, investment banks with at least $50 million in capital can qualify to offer Bitcoin and other digital asset-related financial services. But it gets even juicier. These banks can apply for licenses to serve clients with more than $250K in liquid assets, which can include Bitcoin. Now, this is a major shift in focus for El Salvador as the country moves from retail adoption to institutional investment. It's like El Salvador said, forget the average Joe, let's get those big institutions on board. This new law allows institutions to register as Bitcoin service providers, digital asset service providers, or even digital asset issuers, and it allows them to operate under the existing regulatory framework. In simple terms, El Salvador is giving these banks the green light to hold Bitcoin, issue tokens, and create crypto-linked deals, all while staying within the current licensing regime. Now, let's take a step back here, though, for a second, because remember, when El Salvador made Bitcoin legal tender back in 2021, well, they kind of walked that back earlier this year to secure a $1.4 billion loan from the IMF. Bitcoin adoption by the public wasn't exactly skyrocketing, with only 1% of remittances using Bitcoin and 2 in 10 Salvadorians saying they had adopted crypto. Now, despite the early push, reality eventually kicked in and they had to ease up on their Bitcoin agenda to keep their relationship with the IMF intact. But El Salvador's Bitcoin office, still overseen by President Nayib Bukele, is still claiming they're buying 1 BTC per day. Yet, despite those claims, El Salvador's central bank admitted that the country hasn't actually bought Bitcoin since the loan agreement was signed in early 2025. What we're seeing is accumulation from government wallets that had already purchased Bitcoin earlier. Still, this new law shows that El Salvador's institutional push is taking Bitcoin adoption to a new level, one that doesn't depend on retail investors. All right, we're going to take a quick break, but when we're back, we have the man, the myth, the legend himself, Stephen Orr, Mr. Big Beat, coming to join us and talk markets, so stay tuned. Blockchain Report coming right back at you.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you, don't go!
All right, welcome back. It's time for Market Check with Mr. Big Beat himself, Stephen Orr. Stephen, welcome back to the show. It's always a pleasure to have you. You hear me okay?
Yeah, hey,
Stephen,
how are you, Hank? Man, we're here today, man. I am so super excited. Look, dude, we just talked about, the Bitcoin market is rocking and rolling, right? We talked about this on your last time on your show, right? I said, do not be short. And what's interesting, Hank, is when people like ourselves that have been in this market for so long and the OGs of the Bitcoin world, especially crypto, we see this over and over and over again, right? Where the market is pertained to a few major players. Strategy, MicroStrategy, you're seeing Tom Lee talking about it from the Ethereum side. You're talking about from the institutional side. They're in accumulation mode. And retail is playing catch up. And, let's be real honest here. I'm not going to be on the opposite side of that. We are in total bull mode of crypto. And you saw that when you have all of these shorts and within literally hours, $150 million in Bitcoin shorts were eliminated, absolutely obliterated. And when I saw that, I said it, I even posted it on my own social media, be prepared because there's going to be a shoot up and a shoot down. And, one of the things that even if you're retail, even if you are a small player in this game and you're accumulating, you still need to play by Wall Street rules. They still want you to play by their rules. They don't like the fact that we're winning the game. So if we're winning the game, they're going to be a part of that game. So let me give you your listeners and your viewers a little heads up here. I'm going to show you a screen. I'm going to show you my charts here, if you don't mind. I'm going to share my screen here. And if you'll look at my screen, right now I have Bitcoin up here. And I have it from, back Sunday night, last night, right, to what we have today, right? Now, I'm going to show you something. First of all, you see all these quick little lines. I'm Mr. Technical Analysis. I've been using, I love the technical analysis more than anybody, but rarely do we use CTA like this side of it, okay? So I'm going to tell you one thing. Technical analysis is important right now because of what we've done. We blew off all those shorts. So when we do that, now you have to go back to your charts. So your charting is important. And why is it really important? If you'll notice on the top here, I have it on the 3-minute chart. Why do I have a 3-minute chart? Because Wall Street loves threes. They love 3-minute charts. Oh. Okay, so I talked to you about this last night, right? I said 3 hours and 3 minutes are usually two big charts they love. All right, this was last night. Look at the accumulation. Look at what they were doing all throughout the night, right? The Asian market was trying to figure out, they were setting it up. And I saw that, and I posted, look, get ready because the shorts are going to get just obliterated, which they did. So you saw when it took off all the way up. Now, I also mentioned last night that, hey, as we shoot up like this and as we blow these tops off for these shorts and they get creamed, they're going to come back down, right? Because we're going to have to come back at some point. And this morning, I bought back in. Now, what have I overlaid on this 3-minute chart? I saw the bottom where the accumulation started, and now I've seen the bottom of where the accumulation started again. This right here is called Andrew's Pitchfork. I use Andrew's Pitchfork quite a bit, so does Wall Street. You see the top, and you see the bottom, and it's laying right on that thing all the way up. Now that the heavy shorts, the let's just say the levered up, the 100Xs, the 50Xs, which is dumb, by the way, now that they're in there, you can notice right now that they are still starting to do that. Now they're starting to see it on the next level. Do you think Michael Saylor is stopping to accumulate? Do you think that Tom Lee's of the world is stopping to accumulate? No. Now they've blown all of them out. Now they can just keep accumulating now even more. And that's what you're seeing right now. So I think we go right back up to the top, probably test the 122.4 again, and go right back up. Now, why is this important? Because we're seeing the bottom of linear regression within the Andrews Pitchfork, and we should see right back up. So people ask me, well, how long is it going to take? And if I average that out to 122.4.
Hey, can you reshare your screen really quick? Stephen, I'm sorry. Reshare your screen really quick. We can bring it up for you. Thank you.
Got it. There she go.
There we go. And we got it back up.
Right here, the bottom, right, with the Andrews Pitchfork. You see the top of the Andrews Pitchfork. So I'm showing it from where the accumulation started to where we are about 2 hours ago, 3 minutes, right? So I saw this coming as a buy recommendation, great. And then I lay the Andrews pitchfork over, and now you can see the bottom, right? So it's laying on top of that. Now this, in the Andrews pitchfork, we're looking at linear regression to the upside, right? And I'm looking at RSI, you can see it. I also use Woody's CCI to understand in the MACD side of things. But you can see it's following the line, and it's actually following the bottom of that line. So where we should do, if we're looking at Andrews pitchfork in a more of a regression level, you can see right here, and if I lay it out where the top is, to get back to that top, and I lay it all the way out, and we look right where we are to get to that level, it should happen around 5:30 tonight, right? That's what we're trying to tell you in 3 minutes levels. So when we look at it, and I'm going to stop and share here now so people can understand. But when I look at this kind of charting, this is what I mean by institutions. If institutions are accumulating, if they're the ones in the game, if they're trying to be the major players, then you better play by their game and their rules. And these are their rules, the 3-minute charts in 3 hours. Why? Because the world is ruled in 24 hours, especially in Bitcoin. It does not stop, right? 3 times 8. So that's why threes are important, right? Again, 3s and 12 divided by 3. When I talk about numbers, this is what I mean. So when people say, okay, well, I don't really understand the number of 3. Well, okay, it's not some mystical number. It's just how time is divided, right? So here we are, and now you overlay your technicals. This is why I'm saying technicals isn't the only thing you have to worry about. You got to worry about all of it. Now, on top of all of this, if you add the news into it, right? The news is telling you, look, you just said El Salvador opened up banks. You just said, China's like talking about being like their own bank themselves. Right? You're talking about the United States getting even deeper into crypto, being the lead on this. The news, technicals, and Wall Street are all getting. Why would you ever in hell be short Bitcoin? I mean, it's just nuts right now. And so when I talk about the next level of this, I'm going to show my chart one more time. I'm going to pull up a monthly chart for everybody so they can understand what I'm looking at. So give me 1 second, and I'm going to pull up what I'm thinking here. Share screen one more time, and I'll let you guys understand it. Hopefully you guys can see that now. Let me know if you can, Victor. I will pull it up. This is a monthly chart, and I'm going to pull it up from a perspective. There is nothing stopping this chart. Literally nothing stopping this chart at this point. So when I'm talking about it now, if I look at RSI, yeah, we're getting a little heavy. Well, we got heavy a few times, right? And do you see this right here with the MACD, ultimate MACD? We're not even stopping yet. We could very easily take off like the last time. See this right here back in 2021, and it happened again in 2017. There is no 4-year cycle anymore. That's gone. Because we don't have to worry about the halving anymore. I don't think we have to worry about it. Why do I not worry about any of that? Because 95% of Bitcoin's already been mined. There's no stopping this now. And yes, I do think we're going to get to 150 and 250,000 within a year, probably less.
Oh, wow. I mean, that seems to be a very popular prediction we've seen from a lot of people out there. 150 seems to be a very popular number. With all of this, right now we're around 120, I think 120, 121. We're seeing a lot of bullish sentiment across the board. What are the tea leaves telling you that we should be expecting in Q3 through the rest of the year right now? Again, this isn't financial advice, but what are you seeing from the numbers right now?
When I think about the history of those of us in the OG, we always think about 2 times, right? Sunday nights. Why Sunday nights? Well, Sunday night was always the low volume, and the OGs are out there and they're out partying, they spent their money, but whatever they didn't spend, they'll put it right back into Bitcoin on Sunday night, and the Bitcoin market would go back up. We're talking about 2015, 2016, 2017, right? All right, let's fast forward a little bit. Let's go to 2020, 2021. During COVID, when we took off, the markets took off again. We went from 19,000 all the way up to, well, I guess we can almost talk about it here, all the way to 2024, 2025. Well, what makes us different now? Well, the difference is, like I think I just said this, right? There's a lot of Bitcoins off the chart, off the markets now, and you're not seeing a lot of Bitcoin in the exchanges. They're pulling them off the exchanges, right? So when I think about the next level of this, remember back in the days when it was Christmas and Hanukkah and all the holidays and all those fun things, and Grandma and Grandpa were gifting things. What did the kids want? They wanted Bitcoin. Mom, Dad, give me Bitcoin. Okay, great. I'll take my gift card and I'll put it into Coinbase or PayPal or whatever and buy Bitcoin. You're not going to see that this year. Uncle Jerry's not going to give their nephew Bitcoin this year because they're the ones buying Bitcoin too. They don't even want to give it away, right? So when you start to see that, the accumulation phase is going to get even stronger, right? And going into this. And here's one of the things I talked about on my show this morning. I said this morning that over the weekend, I went to Barnes & Noble, I went to the bookstore, and I saw a big sign that says, hey, you can only buy 2 packs of Pokemon cards per person. Wow, I mean, we're back to that again? Okay, great. All right, there's the accumulation. It means that people still have cash to buy things. If they have cash to buy things, then they're going to still accumulate Bitcoin. They're going to buy it in increments, right? So I think you're going to see an increment buying all the way from now, all the way to maybe even March of next year. I think you're going to see a slow march, maybe some profit taking with some miners, maybe some pullbacks. Great, we need healthy pullbacks to go forward. But you're not seeing Michael Saylor saying, I want a healthy pullback. He's not looking at my charts. He doesn't care. He's just buying Bitcoin whenever he gets more cash because he knows it's 1 million. So why not keep going? I love that. That's great. And it's not just Michael Saylor now in the game. I just was talking to Mooch the other day. He's not stopping buying. His company is continually buying. It's his biggest position, he says, right? When I talked to Mooch the other day, he's like, I'm not stopping buying, right? Okay, let's talk about the other big players in the game. You think they're stopping to buy? No. You think banks have, JP Morgan and Goldman Sachs are stopping to buy? So why should we as retailers? Why should we stop? We should be accumulating. But we also should be accumulating smartly. So when that run up came up last night, right, I told you I sold. But again, when that pullback happened, right to the numbers, I bought back in this morning, right? That gave me more, stacking sats. I think if I take anything from what I said today, stack your sats, whether that's accumulation phase, whether that's trading smartly and not 50 and 100xing your numbers, accumulate. And you'll be happy in about a year or two when we're sitting at 250, 300,000.
I agree with you. I mean, I'm all about accumulate. I do it myself. Do you feel like retail fully isn't grasping the opportunity right now, though? And I wonder if retail really has, on the whole, the money to invest right now. For instance, I just saw an article the other day about Las Vegas. Las Vegas is getting killed. And a lot of people say that Las Vegas and the action there is kind of a canary in the coal mine. And if nobody is going to Vegas to spend money, does retail really have the money to put into Bitcoin right now? Or maybe are they just wisening up and they're not risking it on red and they are putting it into Bitcoin? What do you think?
Took the words out of my mouth. They're wisening up. Las Vegas, and I like Las Vegas. If you gamble, Vegas is okay. It's fine. If you don't gamble, Vegas is a blast, right? There's all these shows and Sphere and things to do, right? Have a good time drinking. They're realizing that, wait a minute, I can spend $1,000, $2,000, $3,000, $4,000, $5,000 at a blackjack table, or I can just buy Bitcoin, which I know is going up. Why would I want to hope for 21 when I know we're going to 250,000?
Yeah. And Stephen, what would you tell the people in the retail sector that maybe are apprehensive to buying Bitcoin right now because the price seems so high? What would you tell them? Because I feel like they're missing out on a big opportunity, but there's no one who's better at explaining why this opportunity is big than Mr. Big Beat himself.
Yeah, that's a great question. I've heard that the price of Bitcoin was too high at $200. I heard the price of Bitcoin was extremely high at $1,000. I heard it the same thing at $1,500, $2,000, $10,000. At $19,000, people were just choking on too much Bitcoin. We're at $120,000, and we're not even stopping. The sheer amount of Bitcoin out there to buy right now on the exchanges is at the lowest levels. We're not. This is. If I told everybody that 95% of gold in the world has been mined, would you go out and buy gold? I mean, I would buy every bit of gold I could buy. Right now, you don't have a choice right now. And miners are doing everything they can to raise money so they can buy machines that are stronger to mine the more Bitcoin, because they can't mine it fast enough for everybody, right? If you've got institution buying, if you've got retail buying, if you've got people not selling and taking it off their exchanges and putting it into their cold wallets, and there just isn't anything out there to buy, that automatically pushes the price up, because you have to have a buyer and a seller to make a price connection, correct? But when they're not selling, that means a buyer has to pay up for it. So it doesn't matter if we're at 120 or we're at 120,000, because you're going to have to pay up for that, because they're not selling. They're telling you where they're not selling. They're telling you where they bought, and they're not going to sell. But miners they've been holding back. They're like, you know what? I know the price is going higher. They've not even been selling. Now, they did sell some here. I think they did last night, right, to take some profit. I wouldn't mind. I don't blame them. Give me more chance to what? Accumulate. That's what you're getting. Make sure when you're looking at your charts aren't telling you anything. I'm sorry. Charts don't talk to you. Charts don't have feelings. They don't have emotions. And I think what's happening, and you asked the question about the retail, they need to learn one thing. They need to learn how to control their emotions. It's not about, ooh, I bought a Bitcoin today, or I hit one Bitcoin, which I think everybody should, which can't, right? Not everybody can buy one Bitcoin, or it's only 21 million. But the emotional side of things in Bitcoin for a lot of people, or crypto, is what's really getting people. They bought $100 worth of Bitcoin and they're going to sell it 5 seconds later. That is not investing, and that's not stacking sats. That's being silly, right? If you want to make money and you want to actually live in the future, because let me tell you, the new numbers came out. 82% of Americans right now don't have enough money to get through one month of savings. 82% of Americans right now don't have enough savings to get through 1 month, right? If you're going to invest in something, invest in your future, invest in yourself, because Bitcoin's there. Going to Vegas is gambling. That's not investing in yourself. That's investing in your liver's going to go out the door, as well as probably going to lose some money, because Vegas wasn't built in a day, and it sure wasn't built on them giving you money, right? But this is an opportunity. Bitcoin is an opportunity to change your own future. And here it is, and many of our futures have been changed because of Bitcoin. And it's not just, oh, I'm richer now. It's because of how we actually will be using Bitcoin in the future, how we buy things. If you want to buy those Pokemon cards, I'd rather buy it with $1 that I bought 10 years ago and now spend it now, because those Pokemon cards are free. So do you want Pokemon cards for free, or do you want to pay up and get them later? So that's why I'm saying it's accumulation phase. We're in the first inning of Bitcoin, to be honest with you. And we're not even seeing it yet. Let me tell you, we're going to $1 million on Bitcoin. That's not a joke. But when, I don't know. My crystal ball's still broken. It's on my desk. But if I were to tell you, if I told you, I remember this. This is Hank. This is true story. I'm on Wall Street, and I was in the floor of the New York Stock Exchange, which I'll be there next week on your show. 3 people told me, I don't understand Bitcoin. I don't care. If you don't understand it, that's on you, right? Do your homework. So I tell people, do your homework, right? At that time, Bitcoin was around 19, 20,000. So eventually some of them said, okay, you know what? I'll take a swing at it. Today they're all happy, right? Oh, it's now 120,000. That's 5x their money, right? We did this very quickly. Right? And I couldn't tell them, oh, you know what? I think we're going to go to 120,000, because they thought it would be silly, right? Which isn't silly today, because we're here. So if I say to you, we're going to $1 million, I don't know when it's going to $1 million. But if you're accumulating and you're quote, quote, stacking sats, what do you care, right? Because it's a good example of this. Whenever you have an extra $100 or $1,000, what are you going to do with it? You're going to go play it on blackjack? You're going to go play craps? Great. I like craps. That's fine. I would rather go take that $1,000 and stick it into Bitcoin and stack that sat. On this note right now, I'll leave you with this. You have 2 chances in this world, right? You can either go up or you can go down. Why not go up? So stack those sats and you're almost guaranteed to go up.
Absolutely. At this point, Bitcoin to $1 million is inevitability as far as I'm concerned. And for those people out there that still aren't convinced, they said, okay, listen, I understand what you're saying about Bitcoin, but I can't possibly compete with the big guys. You and your company, Quasar Markets, offers the average retail investor the opportunity to have the tools to do just that. Before we let you go today, let everyone know out there what you guys are doing at Quasar and how that can help every average Joe actually compete with all the big players out there.
You know, Hank, that's a really good question. When I hear people say, I can't compete against institutions, you compete against the institutions every single day. If you buy 1 share of any company in stock, you're still competing against every institution, because they're also owning stocks. They're also owning gold and silver. They're also owning crypto. So you're never going to ever not be against the institutions, right? So in Quasar Markets, I'm giving you what institutions are doing. Today on the show, I just showed you what institutions, what charts they use, what dates, what numbers that they use, right? I want to give people that ability to see what institutions are doing. And I want to let the institutions see what retail are doing. We need to talk to each other. We don't need to hate each other. What if I could give everybody the actual data of all the pieces of the puzzle, right? Putting the best of the world together in one place, in every language, and AI that. Well, we did that, and we won 4 awards so far. We got 2 more coming up, 2 more awards coming up. So when we decided to do this whole thing, it's never been done before, right? And to put everything together in one place. So not only am I going to get institutional news, which you do on Quasar Markets, I'm also giving you institutional charting. I'm giving you institutional people, and I'm giving you institutional data. The retail is going, wow, all of a sudden, I don't have to pay $2,500 a month. I can now get this for nothing, $15 a month. Wow. That's what I'm telling people. It's time to up your game. And here's the time.
Yeah, absolutely. Investing is a game of who has the most knowledge and who can use it appropriately. And you guys at Quasar Markets are making that available to the masses. And we thank you for that. And as always, Big Beat, we thank you for your time and expertise. Thanks for joining us at the Blockchain Report. Can't wait to have you back from the New York Stock Exchange next week. Exciting times, my friend. Let's keep this train moving. Is it this week? Are you? Oh, it's this Thursday you're at the Stock Exchange.
I'm here on
better.
Thursday. I'll see you on Thursday.
Heck yeah, brother. All right, well, we can't wait to have you back, Stephen. As always, thanks for joining us on the show. And we'll see you again Thursday from the floor itself. We can't wait.
Thanks,
Cheers. All right, we're taking a quick, thank you. All right, we're taking a quick break. When we're back, we're going to wrap things up with a little bullish, bearish, or BS. Stay tuned. Blockchain Report coming right back.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the center of the planet moved to Wall Street. Today, we're traveling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxom, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxom, rock-solid markets.
All right, welcome back. Let's wrap today's show up with a little bullish, bearish, or BS, where we recap our top stories of the day and see how they're looking for Bitcoin. First up, Bo Hines, the White House's boy wonder of Bitcoin, just noped out, and conveniently it happens the same week we find out America's massive Bitcoin stash is probably a lot closer to 29,000 and not 200,000.
You are fake news.
So Hey, get out of here. So basically, we've been bragging about a super yacht, and it turns out we've only got a paddle board. My verdict on this is bearish, guys. I mean, markets hate uncertainty. Right now, the U.S. government's Bitcoin strategy is about as clear as a Dow governance chart. If they really are sitting on just 29,000 coins, that's less market influence and less confidence.
You are fake news.
And if they're lying and have more, well, they're terrible at PR. Get out of here, Donald. So short take is less ocean, more kiddie pool as far as the U.S.'s Bitcoin's holdings, and investors are certainly taking notice. So unfortunately, I'm bearish on that. Next up, we got Michael Saylor, Bitcoin's unofficial pope. There he is. Just dropped another $2.5 billion for over 21,000 BTC. His total stash is now around 629,000 coins. That's more than most countries, and honestly, probably better managed. But the spicy part is he says companies buying altcoins actually helps Bitcoin, which feels kind of like saying your diet will improve if you just start with dessert. I'm going to call barely bullish on this, all right? Saylor's bio loan is walking as a walking, talking billionaire backed with a price floor is great. But if companies start holding any crypto, it makes Bitcoin look stable, safe, and the responsible choice, which is hilarious, but also true. This adoption creep is a creep in action, and it also works in Bitcoin's favor. So I don't know if I totally agree with it, but Michael Saylor, what he says right now in terms of Bitcoin is kind of gospel, so I'm going to call bullish on this one. So one bearish, one bullish, one more left. Last one we got. Last is with every Bitcoin bull out there with the microphones calling for $1 million BTC. We got Cappy Woods, Saylor, Kiyosaki. I mean, they're all calling it right now, but there's a wet blanket in the room, and that, of course, is quantum computers. Well, yeah, I don't know how I feel about it either, guys. I mean, once they're strong enough, they could treat 25% of Bitcoin supply like a buffet with no sneeze guard. I don't love it. But big price predictions on the horizon, a lot of uncertainty around quantum computing. So I'm bullish for now. For now, if the Bitcoin devs solve the whole quantum issue before it solves us, $1 million per BTC is very realistic. If not, we get the first global recession caused by math homework. But until then, the momentum is certainly strong. Just keep your eye on this one, especially those tech nerds in the back with the lab coats. I don't trust you guys. Get out of here. So, final tally today. We got one bearish, two bullish, no BS. So today's overall vibe is bullish, all right? I mean, two bullish calls, one bearish. Saylor alone is offsetting half the bearish news of his Bitcoin buys and predictions. So that's how I feel today. Things are looking okay. And hey, the price is up, so it's a good Monday to be alive and in the BTC biz. Well, that is it for today, gang. As always, thanks for tuning in to the Blockchain Report. Make sure to like, follow, and subscribe to RoxomTV and yours truly at Hank at RoxomTV on all platforms that matter. And I will see you tomorrow, assuming quantum computers haven't stolen my keys first. Until then, hodl strong. See you Tuesday.
security